Wie geht es, meine Freunde? Welcome to my channel. Today we're going to do another portfolio overview. If you're wondering why my camera looks kind of funny, it's because I'm shooting off my iPhone. Apparently my DSLR decided to take a crap and it's just not wanting to connect with my computer right now. Alright, so part of my channel is that I go over my portfolio. Last time we went over it and I explained to you why I'm holding certain positions. You will see that I sold out of some positions. So once I share my portfolio, you will see that there's a major difference in what I had last month or the month before compared to now. So without wasting any more time, let's go ahead and jump into it. But first, make sure you click that subscribe button if you haven't subscribed yet. It literally will help me out. I really would appreciate it. And then you could join the family and be considered a dummy, because that's what we call ourselves. Not because we don't know anything, it's just because it's a term of endearment. When I was a kid, I used to read a lot of these dummy books, and I love the dummy books because they always taught you everything you need at a basic level, which I'm hoping that I am doing for y'all. So once again, thank you for stopping by. Make sure you smash that like button if you enjoyed this at the end. All right, let's transition over to my portfolio. To be very clear, I actually have multiple portfolios. I have 3 other ones I do not share with the public. I have 2 Roths. One of them is with my financial advisor. The other one I manage myself. Then I also have a dividend portfolio I just started recently with Fidelity, as well as a, what else do I have? Oh, a 401k that my job matches, which I just don't really pay attention to too often. I just have an automatic amount that goes into there and my company matches. And to be very clear, all my portfolios are actually up so far except this one. This is the portfolio I want to share with y'all, and this is the one I'm going to continue to share because I would like to repair this moving forward. But this is my play money. So this is the money that I had freely available to invest and hopefully double. But as you can see, I'm actually down 17% in this portfolio right now. That's not including the assets I actually sold off. I'm actually down a lot further. In this portfolio, I'm close to about 40 to 50% down in everything I've done since the past year and a half in this portfolio. So yeah, I wasn't doing too good, to be honest. Some of it was trade, some of it was bad options, some of it was just the market just selling off. So yeah, so let's just go over what I currently have and what and why I have some of these. All right. Also, moving forward, starting next year, I'm only going to invest $3,000 each year into this portfolio. That way I can just continue to focus on the actual portfolios I'm relying on for retirement, is put more money in there. And this is just going to be more of play money. So hopefully, you know, something comes out of this as well, but I'm not going to risk more than $3,000 a year. That's what I told myself. That's the promise I made. No more gambling. I'm done. All right. So what we have in this portfolio, we got some pretty decent shares. I got Amazon. I bought several Amazon shares. As you can see, as of right now, I am down approximately 1.25%. I do expect this to sell off probably even more. You can see that it's currently at $93.41. So that should show you that I actually bought around that time frame. Next is Berkshire, up 15.91%. Berkshire is literally my favorite stock, as well as Procter & Gamble, which I don't have in here. I don't have it in any of my portfolios, in fact. Maybe my financial advisor has it in there, but I don't. I'm waiting for it to hit a certain level, which is around the $100 range, like the low 100s. I hope it makes it there. We'll see what happens. Again, I'm still very bearish on a macro level of things, so I'm expecting it to eventually sell off. But if I had to pick only 2 stocks that I could invest in moving forward throughout life, individual stocks that is, it would be Berkshire and it would be Procter & Gamble. Those are my 2 favorite. Next is Disney. Yes, I recently got into Disney. I got in Disney right after the earnings call when it dumped all the way down to the 80s. I bought some shares there, so I'm up 6.49%. Pretty proud of that one. I waited and waited and waited and finally hit, as well as Google. I was very patient with Google, and that one I'm up 2.14%. I'm still going to dollar cost average at the massive dips at the levels that I have associated with these stocks. If it hits, I will buy. If it doesn't, I will not buy. Next is Match. You're probably wondering, what the hell is this? This is Mattel. So I've been buying shares in this because I promised my daughter a long time ago that I would start buying into the Barbie stock. I looked into the company and the fundamentals, and it's not bad. It's not the greatest, but it's not the worst either. I see some potential there moving forward. They've been creating a lot of partnerships with a lot of brands, and they're expanding their reach within the toy segment. So I'm hoping that this will eventually move back. If you look back in the day, I believe it was up significantly. I think it was close to $30. Let me double check real quick, and I could let you know. Just give me 1 second. I'm gonna pull up this chart because I wanna see exactly where Mattel was back in the day, because it's not the worst. Like I said, year to date is actually down 17%. But the 52-week high was $26.99. The 52-week low was $16.51. So yeah, I waited for this for quite some time. It hit exactly kind of where I wanted it, which was in the low 18s. And then I also started buying a couple more shares in the 17s and the low 17s when it was close to the $16 range at 52-week low. So I bought some there as well. And I'm up 0.68%. Not impressive, but you know, hey, profit is profit so far. So if I sell this, obviously I made some profit, but yeah, that'll be kind of stupid for tax purposes. Now, as you can see, I'm still a bag holder for Meta. Yes, that is my biggest holdings in this portfolio, in fact, and it's the one that's dragging me down the most. It was actually Meta, Square, and XLK. What you don't see here anymore is Square, and you don't see XLK option that I have. Those literally have been the three biggest losses I have taken in this account. Everything else has been, man, so minimal. I literally was very disciplined when it came to any other stock. If it didn't go my way right away, I exited before it got ugly, but for some reason I held on to Meta. I don't know if it's like an emotional connection or what I had with Meta, but I really believe in this company, hence the reason why I'm still holding it. It's so dirt cheap right now. I think it's completely undervalued. It's probably gonna dip below $100 again, but I bought at 300 and 275. So yeah, that's the reason why I'm down 60% on this, 61%. This is right to the highest number, 61%. I'm down 61% on freaking Facebook. It's disgusting and it makes me sick every time I see it. But I'm holding 5 to 10 years on this one. I got to. And I'm not dollar cost averaging right now either, because I need to see several more quarters of Meta to see if they're gonna actually stop diluting their shareholders and also slowly dwindling their cash flow, because they're investing a lot of money into this metaverse and something needs to give here. So I'm just kind of waiting. I'm betting on the metaverse here for sure. And hopefully it works out. Square, I did take an L, approximately I looked at it before I started this channel. I think it was $1,400 I took an L on all the shares that I had. That is probably the biggest L I've ever taken in liquidating a share. Yes, like I had several shares. It was my second biggest holding in this portfolio. But I don't see Square going back to 175 anytime soon. So I just basically sold all the shares once it hit the 60s, and I took a nice fat L of 1,400. Could have been worse. I was down over 2, so at least I got something back. Now Microsoft, I've been buying Microsoft actually around 250s and 240s, so I'm actually down 0.50%, so not too bad. You see my my Norwegian cruise line. These are my cover calls. I'm up 73%. Listen, this thing has been great for me, dude, to be honest. I know some people don't understand cover calls, or they think it's stupid to have cover calls. I have had nothing but success with cover calls, to be honest. Like, that has literally helped this portfolio, and I've been adding cash into this portfolio just doing cover calls. Now, Norwegian, I got super low at that time. I mean, I got it dirt cheap. So this is my current cover call that I'm in. I'm up 73%, but overall off of a Norwegian cruise line, I made anywhere between I think I'm like at $700 now total. I'm just rolling this bad boy out. I'm hoping honestly that it goes back down so I can close my position and re-roll it again, but I'm gonna try to milk this baby as long as I can. Last time I did my portfolio review, I had SoFi in there as well, which I was doing a cover call on. This is the first one that actually backfired on me, was SoFi. That being said though, I have rolled SoFi many times before and I made money off of it. But there was some bad news that came in with SoFi. Again, I bought shares in SoFi at super dirt cheap at $5. I was not one of those believers at 20 or 15 or 10 or 8. I waited for the $5 range and I bought 100 shares, and then I started doing cover calls, and my cost basis was actually at $4.70 in my latest cover call play. Problem is, there was some bad news that came in with SoFi. FCC is also investigating them right now, and the stock plummeted below 470, and I just didn't want to take the risk, so I closed out of my position and I took, I believe it was less than $20 loss. It was more than $20, I know that for a fact, but I took about a $20 loss on SoFi. I got out of that cover call, and you know what? I'm fine with it. Again, I made couple $100 off of it already in the past, so I didn't really take an L on that, but that specific cover call I did. I exited before it got ugly because with all this news, there is a good chance that SoFi can actually drop down to $2 if it continues to get worse. And looking at their balance sheet and their fundamentals and everything, their financials, I like SoFi out of all those fintech companies. I just think it's gonna have a hard road ahead of it, especially while we're in this inflationary environment. Next, I have Warner Brothers. Also did cover calls on that, waited for that one to completely sell off. It went to my level that I felt comfortable at, and I bought 100 shares. I did cover calls on it, and I'm up 14% right now. And my cover call is playing out pretty well right now. What is it? I think, yeah, mine expires in January. So we'll see how this plays out. Obviously, my cost base is $9.50. I think I bought it in the high nines, maybe low tens or so. But it's doing its magic, and I will continue to roll it until I see fit. I have mixed feelings on Warner Brothers. Out of all the streaming services, they're doing a lot of cutbacks. They're cutting all the fat to be more profitable. So I'm kind of just looking forward to seeing what happened with this, because if things turn around for Warner Brothers, I may actually just keep the 100 shares. Otherwise, I would just keep rolling it until my shares get called away. And that's pretty much it, y'all. That's just all I have so far, and that is my covered calls as well as my shares. Oh, real quick, Tesla. You probably saw. Listen, that's just one share. That is all. I bought one share of Tesla. If you follow my channel, you know I'm a Tesla bear. I think it's highly overvalued, but I told my wife that I would buy Tesla if it hit the 188, which was the bottom of a demand zone that I had for Tesla, which clearly Tesla did not hold. It actually went down to the 160s, which is a key support level that I had. I just didn't think it was going to fall that fast. That's the reason why I bought one share at 188. So I'm down 3%. We'll see what happens. I will likely buy another share at 150, and I may buy another share at 100. And if it ever gets back to the $60 range, that's really where I would deploy a lot more capital towards Tesla, because I do still think it's a good car company. I just think it's overhyped, it is overvalued, and it should not be lingering around these high prices. That's just my personal opinion. So you can laugh at me if you want, that's okay. I'm okay with, I guess, leaving money on the table if Tesla ends up running and going to $1,000 again. I personally do not care. I'm comfortable with what I'm doing now. That is my portfolio. Hopefully y'all enjoyed it. That's what I got here. We'll see. I do plan on adding some more Google, Amazon, Disney, Berkshire. Those are my main ones. Microsoft as well. I'm actually kind of waiting for Microsoft to get to close to the low 200s, like the 199. I would like to buy there. That was actually where I initially bought Microsoft about 2 years ago. I just need to get back there. You're probably wondering why I don't have Apple. I actually like Microsoft over Apple. Doesn't mean I wouldn't buy Apple. I actually had Apple shares in this portfolio, and I sold them all for profit, because I do believe that Apple will most likely go back down to 129. And if it doesn't hold 129, 108 is definitely coming. So we will see what happens. I just need to see how the environment is going to be after Christmas and what the Fed is going to do. We all know if the Fed starts cutting back for sure, things will probably run up a little bit, but I'm going to be very patient. I suggest y'all be very patient. Do not deploy a whole bunch of capital at once. You're better off buying the uptrend when there are dips than is buying a falling knife that's disguised as buying the dip. That's all I got to say. Until next time, y'all, my name is Mark. Thank you for stopping by. See you later. Peace out.